Good evening. We will be starting in about 10 minutes. I did want to let all of you know that there is a restroom towards the back. Right through that door, you'll find the restroom if you need to use that. There are also snacks for purchase if you'd like to go out this door. As more people arrive, we do have an overflow area with a live stream, so there is seating available through the door right here. Again, we'll get started in about 10 minutes. Thank you. Hello. Hello again. If you are just arriving, welcome. We ask that you take a seat. In order to expedite the evening, we have bypassed collecting your email address. We do ask you before you leave if you could provide that. If you have any questions during the course of this evening, we ask that you collect a comment card and write those questions down with your name, email, and question. If you're arriving and have a hard time finding a seat, we have about 100 chairs for you just out this door. You can enter through the back door or this door. There are also refreshments if you need water and other snacks beyond. Do you have a... You can't hear. Anyone else can't hear? Can you hear me? Okay, that's helpful for our speakers. Thank you for pointing that out. Appreciate it. If you didn't hear what I said, I just ask that before you leave, if you didn't check in at the front door, that you leave your email before you leave so we can provide a follow-up to questions asked tonight. We will be going in about 5 minutes.
Tim.
But they might have worked by
Yeah, 37. Our oldest, well, their oldest is 6 years younger than me, 7 years. Well, our fourth one, the oldest boy, unfortunately, 2017 died.
Jack. Good evening. Thank you for being here tonight. We still have guests coming in. We are at capacity in this space, and so we want to make sure that we're being safe. This is a talk about safety in terms of fire, so we want to make sure that we're respecting the capacity of this room. We do have an overflow with approximately 100 chairs with a live stream, so we do have the capacity to help folks still participate in tonight's meeting. We have comment cards at the back of the room. Throughout the evening, as you hear from our panel of experts, if you have any questions, we encourage you to write your question down on the comment card. Super helpful if you have your name and email, because we would like to follow up in case your question isn't answered. Again, those are in the back of the room. We will get started in just a couple minutes. There is a restroom towards the back door. Go left. If you would like any refreshments, we do have water. There are also snacks for purchase in the lobby area. Thank you so much for taking your time to be here tonight.
Okay, the official mic handoff. That means we're ready to go. I would like to take an opportunity to welcome everybody here. My name is Dustin Gardner. I'm your county fire chief, and you're in our new fire headquarters. This is the first public assembly, public meeting we've had here. And as you know, I watched the room fill up and our overflow room fill up and look at the panel in front of you, it reminded me one of the great things about Ventura County, and that's our community. It's our community coming together for something like this. It's our elected officials pulling something like this together to educate and bring our community together. And it's what makes this county special. And it's what allows us to do what we do. So as your fire chief, I want to welcome you. Thank you to your staff for keeping everything safe, because we will guard the exits. And so if you need to get up and stretch, please go to the overflow. Like Ashley said, the restrooms are out to the left and right, and there are refreshments in the other room if you need to get out and stretch. And with that, I just say welcome to all of our officials. Thank you for being here, and thank you for putting this together, and I will hand it off.
Thank you, Chief. This room is an amazing asset for the community. This fire headquarters, we just cut the ribbon on it a few months ago. And this room really is designed to be a public information center in the event of a horrific event, where media could gather and receive up-to-date information from our fire department here at the county headquarters. Tonight, thank God, we're all gathered not for a horrific event, but to prepare and to be ready for such a thing, and to address what is probably the number one issue that I hear, and also that comes into my office through phone calls and emails. And that issue is the crisis confronting us property owners around homeowners insurance. I'm honored to join Assembly Member Jackie Irwin in hosting this community town hall and trying to get some really important questions answered for you, for each and every one of you. Thanks for attending. I want to thank the fire captain and the fire chief and for the entire team that is supporting this tonight. Why is this happening, and why is this happening now? The other questions are, how are some policies being reinstated and others are not? Rumors going around about home hardening. Well, home hardening and creating defensible space, are these the kind of things that will help me stay insured or continue a policy? Or other questions come up, and why do these concepts of FireWise or fire safe councils keep getting mentioned in the discussions around property insurance? In many ways, this has touched so many of the residents of the 2nd District that I represent as a county supervisor, and it's touched so many of the residents of the entire county. It's even touched me. I recently was trying to sell a home, and an offer was made and then was withdrawn, and when we asked why, they identified that the home that I had offered for sale was in a high fire severity zone, and they were worried they may not be able to get insurance, so they were looking elsewhere to buy a piece of property. So we've got an amazing panel here tonight. We're going to be joined just a few minutes late by our Deputy Insurance Commissioner, but I want to introduce some of the members of the panel. They're a little bit out of order. First of all, Deputy Insurance Commissioner Julia Juarez, who we'll meet in just a moment. She's running a few minutes late. We've got Rosemary Allison next to me on my left. Rosemary is an expert in real estate, and she's with Coldwell Banker. John Mallett is an expert in finance. He's with Main Street Mortgage and also an author. Daniel Groff, Insurance Brokers West, is also an expert in insurance. He's an elected official at the local level, serving the city of Moore Park as a city council member. We've got Joe Morelli, our Ventura County Fire Marshal. Thanks for being here, Joe. Larry Williams, the Ventura County Fire Prevention Officer. Stephen Watson, the Ventura County Regional Fire Safe Council Director. And myself, Jeff Gorell, County Supervisor, 2nd District, and Assembly Member Jackie Irwin are going to try to answer all of your questions. I'm sure you want to know what's going on in Sacramento, what's being done to address this issue, and what's being done at the local level. We're going to do our very best to answer all these questions. I do want to flag for you a few things. First of all, for those at home, there's a number of people watching at home right now. We're live streaming. But we don't have the opportunity to take questions from them, but they are welcome to email questions. And in fact, you can email questions as well. We will try to answer them while we're conducting this town hall. And if we can't answer them during the event, we'll answer them immediately afterwards. And if they're too complicated to answer immediately afterwards, we will get you an answer by tomorrow or the next day. The email to send any questions is supervisorgorell@ventura.org. That's supervisorgorell@ventura.org, O-R-G. Supervisorgorell@ventura.org, 1 R, 2 L's in Gorell. There are comment cards at the back desk. That's how we're going to get Q&A from the attendees here today. So if you have any questions, please remember to fill out a comment card. That's how we're going to answer them. And what we're going to try to answer tonight is 3 things. What is the scope of the problem? What are the current solutions? And what does the future relief look like in the long term? With that, I'd like to turn it over to my co-host, Assemblymember Jackie Irwin, to say a few introductory remarks.
Well, thank you very much, Supervisor Grell, and for all of you joining us here today to find out what you can do to protect yourself and protect your community. I had my district, my assembly district, changed, and it ends up I am representing from Camarillo all the way down to Calabasas and then Malibu all the way to Bel Air. And I will tell you the number one issue is fire and fire insurance. We have had a number of town halls. Residents don't always get the answers that they want, but we are doing everything we can at the state level. As Jeff said, we have a lot of stories about non-renewals for customers that live in very high fire zone areas like Topanga. But then we started to hear about renewals in the flatlands of Thousand Oaks, which is highly disturbing. And what we see now is that a number of companies are leaving California altogether, which is very problematic. And understandably, homeowners are extremely frustrated, and they have been looking for agents out of state and sought out non-admitted agents, and if they're lucky enough to find a policy, their rates have skyrocketed. Many of you have probably turned to the California Fair Plan, which is supposed to be the insurer of last resort. It provides less coverage and it costs more. It was never expected to be the coverage for many Californians. So fortunately, there's been a lot of pressure on the insurance commissioner. There's not that much that the legislature can do, but the insurance commissioner has really said we need to grapple with this problem. Obviously, there are other states in the country that are dealing with this, Florida and Texas. We really need to get a hold of the problem, and the insurance commissioner, along with the governor, have put together a plan for what we hope is a sustainable insurance strategy that's in the implementation process. And we have been told by the insurance commissioner, hopefully the deputy will be here soon, that this should be the regulations should be fully developed by the end of the year. So we hope that there is a light at the end of the tunnel. Luckily, this evening we're going to hear from experts who are going to discuss the issues that you are all facing, and we will hear from others that will talk about how to reduce your exposure and make homes safer and find it easier to get insurance. So again, I want to thank Team Gorell for putting this together, and happy to be a part of it.
Yeah, thank you, Assemblymember, and for your vocal support for residents on this issue up in Sacramento for well over a year now. The first question is going to go to help us try to frame the scope of the problem, so we kind of fully understand the breadth and the width of the challenge we're facing. And I'm going to ask our expert in real estate and our expert in mortgage, Rosemary Allison and John Mallett, what are the issues in your areas of expertise and the ripple effect that your clients are facing as a result of this insurance crisis?
Can you hear me? Yes. Well, I'm Rosemary Allison, and I was chosen to be on this panel because of the volume of sales that I do. So this is something I am dealing with on a day-to-day basis. Right now, I have homes in escrow. One of them is where a buyer is purchasing a house that he's very excited about buying. And one of the reasons that we have a contingency is to find, okay, thank you. Can you hear me well? Anyway, in order for the buyer to purchase the house and obtain an insurance policy on it, the electrical panel, which is more than 25 years old, needs to be replaced. The roof, if it was more than 25 years old, would need to be replaced. So far, the buyer is spending about $15,000 to remove trees on the property, and the seller has agreed to spend about $15,000 in upgrades on the home. $30,000 that no one had assumed that they were going to pay. Now, the existing homeowner's insurance is $500 a year on this home. The new policy with all these upgrades is $2,000 a year. And that's after all the upgrades. I have another escrow that just closed escrow in Simi. They had to install a leak detection system on the plumbing in order to get insurance. Is $68,000 a year, and the buyers were thrilled to get that policy. So let's talk about reality. I'm getting clients who are calling me who are telling me they may not be able to stay in their homes because of the increase of the insurance. The other problem that's facing me as a realtor with homes in escrow, with these higher premiums, the buyers are not qualifying for the loans. The one where the buyer was paying $68,000 a year had to actually change the makeup of his loan and put more money down in order to qualify. So these are the problems and the challenges that we're facing right now.
It's good to be here today. My name is John Millette. I appreciate the opportunity to be with you today. As far as a lending goes, it's all about qualifying. It's all about what we call debt-to-income ratio. It's about the ability to have somebody be able to make it. And if you were to go back 5 years versus now, an individual family that is buying a home will need to make anywhere from $2,000 to an extra $15,000 a year to qualify for that incremental charge that the insurance now costs. So there's a big gap or delta there that makes it a little bit more difficult, and in some cases, a lot more difficult for people to qualify for financing. The one that is the most concerning to me, there's two issues that are most concerning. One is that people who are refinancing, they are coming back, they could qualify at one point, but now they're coming back to refinance. Maybe it's because they're moving down or whatever it might be, or either refinancing their home, and it's having a hard time qualifying because they used to be able to qualify, but now they can't qualify, right? Because the insurance, the incremental cost of the insurance is that much higher. Condominiums are a real problem because if you have a condominium project that has, I don't know, 150 units, and then all of a sudden the insurance carrier for the entire project pulls out, then everybody is left with higher rates. And so instead of increasing the monthly HOA fee, which really takes a big deal to be able to do that, the board just simply votes for an enactment of a liability for 1 year, and everybody has to chip in an extra $1,000. I mean, that's a lot of money. And then it becomes a contingent liability. And then when we go to do the loan and we get the pre-approval, and it shows that there's an issue where there's a contingent liability of this money that's going to be due, the lender also has to take that into consideration. So this idea of insurance is a big deal. A couple, 3 years ago, as rates were starting to butt up, it was like, okay, we can probably handle this. But now it's getting to the point, especially the location of the property, if it's in a high or extreme fire hazard area, it really takes a lot of pre-planning just to be able to make sure that the applicants will qualify for financing. So is there solutions to it? Sure, we can mitigate it by lowering the cost. We can lower the rate. There's things that can be done to mitigate it, but nevertheless, the cost is becoming so incrementally higher than it was that it is becoming a definite issue.
Thank you, John. I'd like to ask insurance professional Daniel Groff now a question. Does creating defensible space, as we've heard, help in the insurance renewal process? And are insurance companies starting to value home hardening that so many people in this community are doing?
So the defensible space is a very important part of where the insurance market is going. A lot of the carriers are sending out notices that with basically a ring around your house, they've done aerial AI imaging. They can tell if your roof has moss or mold on it. They can tell if you have a dog in your backyard. They can tell where your trees are located and your plants and your bushes. So I've been working with a lot of our clients. We have 32 offices in 5 states. 26 of them are in California. And we, as our agents, will go out to the house and literally walk through the property with the client to show them what they need to remove. It's really hard to explain that to somebody that has a beautiful topiary right next to their bedroom window that they love, that we have to tell them they have to remove it, or their palm trees, or their hedgerows, bushes, their cypress that they block to block the neighbors. They want an 18-foot space between every tree. So you're going to have to accept some of that, because those kind of things are going to help harden your home. The Firewise community is really important, and I think the hardening is going to help in the long run as the carriers become rate adequate, and we'll get them back in the market faster.
Yeah, thank you, Daniel. And maybe to all three of you, can you tell us what companies you're aware of that have formally left California or are in the process of leaving, and those companies that you've heard might consider doing so? Is that information known or discussed? Can you share that?
The biggest one that's talking about leaving is State Farm.
Yeah.
They're just not, they're not writing a lot of new business right now, but what they've done is they've separated their corporation of California away from their national corporation, because they don't have enough assets in case there's a massive loss to the California Fair Plan to be able to pay their portion that they would have to pay. Chubb has left, AIG has left, Cincinnati's left, CSE has left. CSE it broke his heart to shut down the company, and it was founded by firefighters, and they had most of their clients were government employees, and it was tough to see them leave. The good thing is they've spun off and they started another company called Lightspeed. It is a non-admitted company. We write a lot of business with them. They're pretty new to the marketplace, but you're going to see a lot more of that non-admitted, and to help us get through this problem here.
Do you mind explaining non-admitted? Because it's a definitely important issue for people who might be offered insurance but by a company that may not be admitted.
So most of the non-admitted companies are out-of-state companies that Lloyd's of London's one. So Lightspeed is basically a Lloyd's of London product. It's written on their paper. So they're AM Best rated. They have the financial stability. You have to look at the stability of the company. You get into a Delos, which is a non-admitted. That's a B rated. You get into a Heritage, which is a B plus rated. So you want to look at their rating for their financial stability. If they're A plus rated or A rated, they have a good backing. Being a non-admitted is not a bad thing. It's just they're not having to participate with the California Fair Plan pool in case of a massive loss. So if you remember about 3 weeks ago, Big Bear was evacuated. California Fair Plan holds over $30 billion in insurance up in the Big Bear area. Big Bear, Arrowhead, Ridgeline, all that area there. When they evacuated that, if that was to have caught on fire like paradise, it would burn like paradise. There's only one way in. State Farm would be writing a check. 14% of the marketplace was owned by them. California Fair Plan has, I think, $5 billion in assets. There's $30 billion in coverage. There's just not enough money. And that is what's stopping the carriers from writing business in California today. Travelers, Safeco, Mercury, they're all nervous about that part of the situation that they're all tied to right now. And they're not allowed to claim that reinsurance cost or the loss they could have in that, and modeling for their expenses. And those are the things that are really affecting us right now.
Do you have some more? Sure.
Regarding California Fair Plan, their current exposure far outweighs the ability to pay claims. The California Fair Plan's total risk exposure was over $396 billion as of June 2024, and they have about $2.9 billion in assets, which is a breakdown of $700 million in cash, $200 million in reserves, and $2 billion in reinsurance. In comparison, their exposure was $50 billion in 2018. So obviously it's exploded. Their growth has been huge, with more than 400,000 policies now in place. Every transaction I have in escrow right now is utilizing California Fair Plan. They continue to write 1,000 policies per day and receive about 2,200 phone calls daily from real estate agents, or from insurance agents.
So one quick thing on that California Fair Plan, sorry.
I'm sorry, before you do, if the speakers could please stand up. We have some folks that are having a hard time seeing who's speaking. So if you could just, when you do speak, if you could just take the mic off and stand up, that would be great.
So the California Fair Plan's last year's number was $273 billion. So they added $100 billion in less than a year. They were only writing 365 policies a year 5 years ago, 6 years ago. Now they're doing 1,000 a day. So their market share is way out of their capacity they can handle. You're going to see it. They needed rate as well. So they applied to the Department of Insurance for a rate increase. They needed a 70% rate increase that they applied for that. The Department of Insurance only gave them 15%. So that's what's going to keep them from not having enough money to do that, because they're not rate adequate. Because of that, a lot of people are getting California Fair Plan policies that really shouldn't be getting it, because if your home is over 3,300 square feet, you really don't qualify for a California Fair Plan policy. There's not enough coverage. They only have $3 million in a cap total insured value. At a $500 square foot to build a house, you're far exceeding that at the 3,300 square foot mark.
Thank you.
All right. So I'm sure many of you are on the FAIR Plan, and the big hope is with the insurance commissioner rewriting the regulations, which will allow catastrophic modeling. It will allow reimbursement of secondary insurance. It will allow a more streamlined process of rate increases. The hope is, and the discussion has been with insurance companies, that if the insurance commissioner passes these regulations, that these companies will come in, because we need as many of you to get off the FAIR Plan as possible. Again, the FAIR Plan was supposed to be the carrier of last resort, and now folks in high fire-prone areas have no other ability to get insurance. So we are, again, looking forward, and I'm glad you spoke optimistically of it, because it is, we're hoping that, and the insurance commissioner will be discussing. But we spoke a little bit about defensible space, and we have experts here on defensible space. So can you tell us what's being done in Ventura County, and have you seen this make a difference with the insurance companies that are writing policies?
If I can get the mic. Okay, now I know how to use the mic.
We got a Jaws
Okay.
of Life in the back we can use.
Yeah.
Pry it open.
Okay, so I'll get started. There's a few of us here to answer that question or others that come up. The Ventura County Fire Department has had our Defensible Space program since 1931. So that's a long time. Over that time, those standards have increased, especially in the last 5-10 years. We do 19,000 inspections annually on properties throughout the county, and that's for the 100-foot defensible space around properties. Recently, starting in 2021, we've done inspections during real estate transactions as required by state law. We also have programs that involve removing or reducing vegetation outside the 100-foot zone, so above and beyond minimum state requirements in the county. In 2019, we adopted what's called Zone 0 requirement. This is for new construction. This is for the zone that's 0 to 5 feet from the home. It's a regulation that the state has just a little bit further behind Ventura County in adopting, but essentially it's having no combustibles within 5 feet of the home. So that's for new construction right now. We do landscape plan reviews during construction. We have power pole inspection program. We do 340 miles of fire, utility, and ranch road maintenance throughout the county. And aside from that, we've been doing probably more than ever in the last 2 years, mostly Larry Williams here. We've been out to 50 community events, engaging with the community, educating on the FireWise program. And in the last 2 years, we've gone from 2 to having supporting 21 FireWise communities within the county, which is one of the 2 measures that could be considered when it comes to the Community Fire Risk Reduction List for the State Board of Forestry, another measure that may help homeowners. We haven't seen the data yet locally on that, and as I mentioned, we've gone from 2 to 21 Firewise communities in the county in just the last 2 years. Outside of that, it's really our partnerships. The Fire Safe Council is here. I'm sure you'll hear from them. But in addition to all the measures we're taking at the county fire department, we're working with our partners to educate the community. So I'll turn it over to Larry if I forgot anything or.
Good evening, Larry Williams. I'm the supervisor for our Community Wildfire Preparedness Unit, known as our Fire Hazard Reduction Program, for those of you that get that notice on April 1st to clear the brush around your homes. The key about the defensible space that everyone hears, yes, our county has been very proactive in a defensible space ordinance, and it's increased over the years where the state didn't come in until 1965 with defensible space. Your county department has always been ahead of the state in looking at preparedness for our community and stuff, and I appreciate the support from our chiefs on that over the years. The defensible space, though, is, you've got to realize, is it's everything in that 100-foot zone around your structure. It's what you plant and what grows naturally. There is issues with that if it's not maintained properly. So we do want you to really look at that defensible space area. And then Stephen's going to talk about in this program about the home hardening aspects of it. But it is very important. The studies show that. We follow the studies, we research before we ever come out with anything to make sure what we're doing is correct to help protect our community, to give you the best information how you can protect your life, which is number one, and your property is number two. Out in the hallway, we do have a lot of brochures that talk about that. So please gather that up, look at our websites for the information. Thank you.
Thank you, Larry. So we're still waiting for our deputy insurance commissioner. I'm told that she's just pulling up, or thereabouts. But as we do, we're gonna kind of skip ahead to some questions from the audience, and if we could get those cards, if you could grab the cards, that'd be great, and we'll start asking some. Oh, come on in, Julia. Welcome. Thank you. You made it. The building is not yet on Waze, so if you put in fire department, it may take you somewhere else. Thanks for joining us.
Thank you for having me.
Good timing.
So while we're waiting for Julia to settle, could you? You're going to be talking a little bit about, I guess, in the next session about some of the things that you can you do, but can you? So we'll wait for those. But when we were talking about the 100-foot defensible zone, that really prevented fires in Ventura County for decades. And in the last few years, we've seen two big fires. So are you rethinking whether that is far enough? Are you thinking that these the home hardening has to now be a crucial part of it? How do you look at the fact that we've had two big fires in the last 5 or so years?
Well, it's unfortunate we've had two large fires. The Thomas Fire in 2017, which at that time was the largest fire in California history. It burned in both Ventura County and Santa Barbara County. Approximately 1,200 structures destroyed overall, almost 500 something in the city of Ventura, which at that time, our Fire Marshal Joe Morelli was the fire marshal in the city of Ventura during that fire. A year later, Paradise burned, the Camp Fire, which overtook the #1 fire, but we also at the same time had the Woolsey Fire on top of a mass shooting event that really taxed our resources. However, again, that fire burned Ventura County, LA County, and there was approximately, I think, 1,500 structures destroyed. Now you look at those numbers, and you look statewide in the large fires where you have thousands of structures being destroyed. Yes, we lost in our jurisdiction about 200 of those numbers, about 250 in the Ventura County Fire Department's jurisdiction of those numbers. So our percentage was definitely a lot less. We don't want to lose any structures at all. And prior to that, the largest fire we've had where we've had structure loss was maybe 3 dozen during one of our fires and stuff, but it's been very small. The program works. That 100-foot zone really works when it's done properly. and in place there. LA County had 200-foot brush clearance ordinances during the Woolsey fire, yet they had a lot more structures destroyed too. You gotta keep in mind, it's not just the clearance distance, it's the structure itself. The ember front, it's not the fire front, the ember's getting into the structures. We gotta button up the structures and then work your way out. And again, Stephen will talk a little bit more about that. We don't want to see any structures, but our program has been shown to provide the greatest chance to prevent large-scale loss in our communities and stuff. It's been recognized in the Governor's Blue Ribbon Commission reports numerous times, the National Fire Administration. Internationally, we've had people come out. Other agencies have modeled our program. Again, we've been doing it for over 90 years in our county, way ahead of others. So it's very important, but it takes you as the property owners in partnership to implement and make sure it works. So that's where we're at with our program.
All right, thank you very much. Ms. Juarez, we have been anxiously awaiting you. What you missed is we just heard from realtors and insurance brokers about how difficult it is to get insurance. I can tell you a lot of the folks that are sitting here are on the FAIR plan and very concerned after they just heard the statistics about how underfunded the FAIR plan is. And I think they all really need to have answers about what the insurance commissioner is doing to start to fix the situation that we have in California. So maybe you can just give some introductory remarks. Thank you.
Just lift. I did the same thing. Just lift it off. There you go.
I need to do a little bit more weightlifting. Good afternoon, everyone. Thank you so much for your patience with me. I greatly appreciate it, and thank you for being here. We know that the insurance crisis is hitting everyone up and down the state. This has not been something that was just for areas that were very much so out in the mountains and in the field. It is absolutely something that is happening all up and down the state. And what we have seen is that it is, the reason that it is just hitting everyone, we are hearing from people who are getting non-renewed, and so you have to go to the FAIR plan. The FAIR plan was created as a stopgap only for you to use it for maybe 2 or 3 months while you found insurance. We have seen now that people have been there for a year, maybe 2, and throughout this entire crisis. And so we understand the frustration, because when you get a FAIR plan policy, you only get fire protection. You still have to buy a difference in conditions policy. It is a lot more money, a lot more expensive, and a lot less coverage. And so you absolutely do not want to be in the FAIR plan. So when, okay, sorry about that. I hope that you were able to hear at least most of that. But basically, the FAIR plan was not created for so many people to be in it. When Commissioner Lara came on board in 2019, we were going up and down the state to find out, what were the biggest issues that everybody was seeing, and what are we hearing from insurance companies as well. And of course, we came in right 2019, right when all of these fires were happening, and so a lot of people we started to see what was coming. And so we quickly, learning from people, we decided to get everyone that worked in fire, so Cal OES, CAL FIRE, all the different agencies that worked on fire, to come together to find a solution for it in the immediate. What can we do as a state? What we kept hearing from the insurance companies was, we have way too much risk. Well, way too many homes can catch fire. There's way too much risk. And if you look at the state of our industry, of the insurance industry, what we see is that 12 companies, there are over 115 companies that sell homeowners insurance in the state. Yet, about 12 companies are responsible for 85% of the entire homeowner's policy, all of the policies here in the state. So the one company that you hear from, that you hear on the news that is dropping people all the time, State Farm, right? You're hearing, a lot of you are shaking your heads, like, or you were probably dropped by them. What you're seeing is that State Farm had 22% of the market. So they have the biggest chunk of the market. The next one under there was Farmers, who came in around 14%. And then the next one after that was about 6%, and everybody else has less than that. So those companies that you hear from that are very much so like, we need to figure out, we have way too much risk, they are the ones that you're hearing from, that are trying to minimize the risk. So what can we as consumers and we as the state, what can we do? Let's minimize our risk. So we came in with the first thing, Safer from Wildfires. How many of you have heard of that? A few of you? Safer from Wildfires framework was basically, God gathered everybody that worked on fire, and we created very specific things that everybody can do. So it is very much so about your home itself, the structure, your surroundings, and then your community as a whole. So if you do these very specific things so that everybody's on the same page, then the insurance companies must take that into consideration when they are renewing your policy or selling you a policy. So now it is California law that they have to take all of those things into consideration. So the more you do, the better looking you are for those companies, and the safer that you are from wildfires. The expectation, so all of this is also done with a community mitigation, the part of that. Are any of you on a fire? Few of you kind of, you haven't, many of you haven't heard of that. Basically what that is, the expectation is that if you create a fire-wise community, so maybe like eight homes is all it takes to create a fire-wise community. If you have 8 homes, and you all kind of, help each other out, make sure that your area is, is as well as it can possibly be. The expectation is that if there is somebody within those homes that is not able to take care of their home because they're elderly or they're just unable to do that, that the community comes together and helps. So because of that, that is another thing that you can use as a way to keep yourself safe, but also make yourself safer and make yourself more attractive to insurance companies. So all of that was created in the beginning in 2021. Now what we are doing is we realize, we come back to the insurance companies and we say, these are the things that people are doing to try to get themselves safe, to be safer so that they don't have so much risk. What is the issue? Why are you still not writing policies? And even though they were asking for rate increases and many times receiving those rate increases weren't enough to get them to be in a good place. So what the commissioner was able to do was actually create the sustainable insurance the sustainable insurance strategy, working with the insurance companies, working with the governor, working with all of the agencies again, to try to find what else can we do. So what the insurance companies are asking for is, as many of you know, they will say, these entire zip codes are too risky. We're just going to drop all of them. So instead of that, what they're asking is, can we use catastrophe modeling? Catastrophe modeling basically is the ability to look at your parcel very specifically and figure out what the actual risk is there. So they're asking for that. California was the only, practically one of the only states in the country that would not allow catastrophe modeling. That basically the way that we did our rates would be, let's look at the last 10 years, what have you lost, and then we will look at the future to say that that's how we'll say that what the losses that you will receive. Well, in the last 10 years, we have seen the biggest fires and the biggest losses, so it is not conducive for business at this point. So what we're doing is, if we allow you to do catastrophe modeling, the other portion of that is the insurance companies also have to buy insurance for themselves. So it's reinsurance. And for reinsurance, that has been extremely volatile because California is not the only place that has had a lot of losses. We have seen, of course, as we see, even now, Florida, in so many places throughout the world that we are seeing a lot of losses. Reinsurance is going up and down at crazy rates, and insurance companies are losing a lot of money with that. And California was also one of the only states that didn't allow insurance companies to take that into consideration when they looked at their rates. So that also made insurance companies a little more volatile in that sense. So Commissioner Lara said, okay, if I give you catastrophe modeling, so you can see very specifically what people are doing in their homes and what their rates are, and I allow you to use reinsurance as a way for you to tell me what your expenses are for your rates, I will do that. I will allow you to do that if you only count California losses, California risk. So can we figure out a way to do that? So we're looking into that, and we're looking into catastrophe modeling. Now, if we allow you both of those things, which is what the insurance companies have asked for, then we said, then what you need to give us as consumers in return is you need to then write policies in 85% of those areas where we have the least amount of, or the biggest risk, and the bigger amount of people on the FAIR plan, so that you can take people out of the FAIR plan into the regular market. So let's figure this out together. So this entire year, the commissioner, the staff at the department, plethora of lawyers, plethora of actuaries are figuring out how to do this within the year so that by January 2025, we actually have a system where insurance companies can come in and say, okay, this is the actual rate, this is the actual risk that we're willing to take. These are the policies that we're willing to write in the state. So opening up the market altogether. So they're ready to do that. We have Allstate has already said that they will open in every area of the state as soon as this becomes available. And we have seen several other insurance companies that have already started working on their plans and putting their stuff together so that January 1st, they will be able to then turn in their applications for rate reviews so that we can then try to figure out how do we get more of them out there selling insurance. That is our best bet right now. The biggest change that we have made in insurance policy in the last 30 years, came into place. And so those things are the things that will then get us in the state, and then when they are looking to sell insurance, they're going to be looking for those homes that are the safest, those homes that are mitigated. So we encourage you. I have here, I brought for everyone, the Safer from Wildfires framework. This is something that every agency, they all have this very specific things. And as you will be able to see, there are 6 things in every area that you can do. So that's already in place. I also have a little bit more detail about the strategy, so you can look at it at your leisure. And then I also have tips for residential insurance. So if you're looking for insurance, you can't find insurance, we have a lot more information there. Ultimately, the FAIR Plan, as I started, the FAIR Plan was not created to have this many people in it. And so the expectation is that as we get people out of the FAIR plan, get people into normal insurance, then everything will then stabilize a little bit better. And you won't have to be stuck having to pay 2 policies, but rather just do your one insurance. So that is my, really quickly.
Yeah, thank you very much for being here and for that explanation. My first question is about the timeline. You mentioned January 2025. That sounds like a very important date. Could you walk through what the timeline looks like if things work as the insurance commissioner hopes in terms of stabilizing this market and bringing back some normalcy? What does that timeline look like given the benchmark you've already mentioned in January?
Absolutely. So this whole year we have been working on the regulations, making sure that we have everything together. Catastrophe modeling has never been used in the state. We don't have a public model, so we are actually working with experts to find very specifics and learn and put everything in place. So we will have everything that the state needs to have in place for this to happen by the end of December. In January, then insurance companies will have to turn in all of their applications for rate reviews to say, all right, if now that we have this ability to check this, this is how much we expect to charge, and this is where we're going to start selling insurance again. So that, normally a rate review needs to take about 90 days, but we in California have a system where we can have interveners. And in the past, insurance companies, and why is it that California, by the way, we have one of the lowest insurance rates in the country. California is the biggest market in insurance. We actually are the biggest market in the entire country, and we are only second to China in the world. That means that insurance is being sold here everywhere. So we need to make sure that the market grows and is available to pay out all the claims. So when interveners come in and they say, we don't like this rate, in the past, the way that it worked was they would apply for 6.9% because that would be 7%, and after 7%, then interveners can come in and say, we got to do a hearing, we got to go through, like all of these hoops to allow you to go through this. Sometimes they needed maybe 20% increase or 30% increase, but they would only ask for 6.9% because that way they would avoid the intervener. But what happened was that the minute they got their okay, you can charge your 6.9%, the very next day, we got another application from them again. So it was just a roller coaster, and it never really, by the time they got the rate that they requested, they were already behind for what they needed. So that was just a backwards type of system that we have. So at this point, Commissioner Lara asked the insurance companies, ask for the rate that you need. And then we will look at the numbers and see, does that make sense? That's why you will see and you will hear, such and such got a 30% increase. And you're like, what is that? That's so much more. Well, that's because they have never asked for anything bigger than the 9% or 6.9%. But now they are actually asking for what it is that they need. And so the expectation is that then we're going to stabilize the market as they know that they will be able to charge the actual rates that they need in order to be able to provide for everybody when something happens.
Thank you. I'm going to ask a question that came from the audience, and it's a two-part question from two different members of the audience, but connected. Insurance companies under this kind of new approach are going to be approved to use modeling to forecast catastrophic fires. The questions that have arisen are, one, will these models that insurance companies are going to be using, will they be available to others in the public to review and to provide feedback. Secondly, that once these modelings are set, the premium rates will the commissioner's office deny their request for increases, as has been done in the past, to protect consumers? And how will the commissioner's office change their approval process for rate increases? Those are the two things based upon the modeling.
So on the modeling, that's what we are working on right now, making absolutely sure that we do this correctly. We don't just want to rush to have something in place and not do it correctly. So we are, we have hired the people that will be reviewing, the experts that review these models, and they're able to read them and understand, because that is way above some of our pay grade. So they will actually be able to come in and review the models and see all of that. Every insurance company is going to have something, it's going to have their own. And so there's going to be a lot of movement on that and trying to figure out exactly how, what makes sense for them. So that's why we have hired those people who are going to be looking at these and making sure that it's correct. The other part of this is the commissioner has actually started working with University, Cal Poly Humboldt. In what we're doing is we're going to be working on creating a public model for catastrophe. And the expectation is then, as we are creating this, we are learning from what they are giving us, but then also we will create a model that will then be able to not just review, but then be able to scrutinize all the other models that are going to be coming in. So this is something that Florida is the only state that has actually created something like this. It took them 5 years to put that together. I don't know how long it's going to take. At this point, we are, beginning to get all of that together with the universities, and so that is that's going to be the thing that is going to kind of have the checks and balances there. That is besides the people that are hired within the department to do that. Reviews, rate reviews. We have hired 12 new actuaries within the department, and we have actually, the commissioner says, we are not only looking at what, all of the different things that we need to do to change the system, with the insurance companies, but we also need to look inward and see what is it that the department needs to do to modernize itself as well. And so one of the things that we're doing is we hired new actuaries. We also purchased all of the different things that we need technology-wise to be able to do these things in a more efficient way. For many years, even as as early or as late as when we first came into office in 2019, the commissioner will get reams of paper with a lot of this information. So now we are actually looking at this thing and updating everything so that by January 1st, we will be ready to get all of these applications. The expectation is that maybe, we're not going to see all of the, insurance companies out there selling and everything all back in place immediately in January 1st, but we are expecting by, mid-2025 that a lot of these have already been approved, and we are working with them to ensure that it is the best for the consumer at this point.
Thank you. And I just want to clarify once more, because I think it is confusing. The way California prices insurance policies right now is looking backwards. And so when you have an area like Ventura County that had the Thomas Fire and the Woolsey Fire, that is why you are getting the high prices. With catastrophic modeling, it is look forward modeling, and it takes into account communities that have been hardened. It might even take into account, hey, this area has burned already, and the risk in this area is less than it was before. So again, California by law was not allowed to do catastrophic modeling. So hopefully that's one factor that will allow at least certain areas to have lower risk factors and lower insurance prices. Now, obviously, again, if you're in the middle of Topanga, that's, no matter what you do, that is a high fire risk area.
But also in Topanga, Topanga Canyon, I know that there has been a lot of investment on extra efforts to be safer, right? And so right now, the way that our system is set up, you don't get credit for any of that. There is no system where you get credit for that. With catastrophe modeling, they will be able to look at all those things and take all of that into consideration as well. So it will be a lot more detailed, and it'll be a lot more, I want to say, correct.
What the actual
what the actual
risk is. I have a question here, and it is about a community in Ventura Park where the community does fire hardening, and they get yearly fire preparedness reviews and fire department inspections, and yet for that community in Ventura Park, that's not good enough for the insurance company. So how can we combine what is good enough for the fire department with what is good enough for the insurance companies? And I don't know if we can actually hear from the insurance companies and from the insurance commissioner's office.
So on that side, we're looking at, it's not just the hardening in that area, it's the surrounding areas around that aren't as well, that can lead to a situation there. If you think back to the Thomas fire, we had billions of dollars in smoke damage claims for areas that didn't burn, up to 5-7 miles away from there. So it's those kind of things that come into play as well. Without getting the proper rate, as was mentioned earlier, California was the 48th cheapest state to have insurance in up a few years ago. 48th cheapest, that's crazy with the size of our market. We're not even close to what half the states are at right now. It's not, I don't think the rates are gonna go down. I think we're gonna figure out the right rate. It's gonna take time. A lot of the carriers I work with 70 different carriers, and a lot of them have a lot of faith in what's going on right now at the Department of Insurance. We don't think it's gonna be super fast because January's gonna come, they're gonna have people turning in their rates. The interveners are gonna get involved. They always get involved because they make money being an intervener. They don't disclose that as much, but they make millions of dollars trying to stop the rate increases. That'll take time. Hopefully we'll see some rate come in by probably about the middle of the year. It'll be a few carriers at first, and then it'll slowly, we're not sure who the first carrier is gonna be to jump in. It's probably not gonna be State Farm. It's not gonna be Farmers. They're the big ones. They're gonna stay out as long as they can to try and earn in some of that money that they've been losing over the years.
Thank you for that. And also, just in the sense of intervener, what the commissioner has done for that, understanding that that is a major issue, and consumers always just hear, oh, ensure that our rates are low, but at the end of, if for 30 years we would have seen incremental increases, we wouldn't be in a It's one or the other, right? But what the commissioner is also doing is making changes to the intervener process. So what we're looking at is seeing, all right, if you are going to intervene, there are two things that you need to do. First, you have to come in with something that the department hasn't brought up yet. And what interveners would do, they would say, oh, we want to intervene because we don't agree. Oh, what did the department say? All of those things. That's why we're not going to do it. And they wouldn't really do anything different or anything new, but they would just keep it. And it would make it, maybe 6 months, maybe a year. At times it was almost 2 years that they would not allow things to go through. So the commissioner has changed that now. So if interveners are going to come, they have to bring something that the department has not flagged. It has to be new and it has to be substantial. And at the end of the day, it has to be complete. So they can't just come in and just kind of hold the process down. We're also changing that.
Right, and then we wanted to ask the fire marshal, how do we make sure that the inspections that you do inform whether the insurance companies actually accept the mitigation as sufficient to get lower rates?
So there's two things that the insurance companies, I think was mentioned, are consider with insurance rates. For Ventu Park, which was brought up specifically, that is a Firewise community. That's one of the two considerations. The other is being on the State Board of Forestry risk reduction list, which we are as a county. We've had that designation for the last couple months, but that doesn't guarantee that someone's rates are going to be lowered. But as far as what we're doing in the fire department, there's a lot more Firewise councils that can be, fire safe communities that can be set up out in the community. We have 22 right now. That's quite a bit. There can be quite a bit more. So if you're not in one of those areas, we have some information on the table outside if you want to find out about that. It's also on our website. But that's what we're doing in the fire department, at least.
The other thing you can do is once you get your certificate for your Firewise community, your HOA will have it. They'll be able to distribute it to you. You can send that to your agent. Let them know you have it. If you have your home hardened, call your agent, have them come out and take photos. Make them do some work. I hate to say it, but they need to go out and make sure you've done the right things, and then they can take photos and send those to the carrier as well, which will help you.
Thank you. We're gonna hear a full presentation on Fire Safe Council, Firewise communities. We're gonna park that toward the end because I really want to make it through as many community questions as we can. I'm gonna combine two into one because they're related, and this is these are kind of basic questions that some of you may know, but not everybody. And I think it's important for us to answer. Who defines what a high fire severity zone is, and what is that, and why are they defined as such, and who gets the responsibility of creating those zones? And then secondly, what does fire hardening a property look like?
The Big Apple, the Fire Hazard Severity Zones, FHSZ, those are maps developed by the State Fire Marshal's Office. It took them about 2 years to go through what's considered the state responsibility areas, which includes all the wildlands in the unincorporated areas of the state. They went through that process. Those maps were adopted in April of this year. And they defined the different zones of a moderate, high, and very high fire hazard severity zone. That's set by law in the Public Resource Code. In your local areas, which includes all incorporated cities and areas outside the wildland areas in the unincorporated area, which if you're adjacent to, you can still be in a fire hazard severity zone. The local responsibility area maps are still in the process of being updated by the State Fire Marshal's Office. We've been waiting for them since the Thomas fire, and they're still not done. They're waiting to get the green light from the governor's office to push them out for review. And last we heard this last Wednesday was we may see those at the beginning of 2025. When those come out, they are increasing the zones, unfortunately, in the LRA areas. Right now, they only map the very high zone. State law changed to require them to map the high and the moderate zones. That will have some effect on construction, some other things, but we're waiting to see those maps. So it's a state law process, and when those do come out, we are limited in what we can do with those maps. We cannot reduce. We agree. We cannot reduce, we cannot remove anyone from those zones when the state issues those. So our hands are pretty much tied on that. So we hope the modeling has been updated to be correct, and we're waiting to see what those are. But again, that's identifying the hazard. The risk is what the insurance is looking at, that they're looking for. What can we do to reduce that hazard? And that's where the defensible space and the home hardening come into play. Firewise communities and the fire risk reduction list, which we're one of 50 governmental entities in the state of California that made that list for 2024. It's good for 2 years. Make sure your insurance company knows we're on that list. They're supposed to look at that. And Stephen's going to talk about home hardening in his presentation coming up.
All right. So,
Can I also?
Larry, could I have a question on that? in the real estate, I work with Larry a lot, but anyway, in the real estate profession, when we sell a house, we go by the property ID report that tells us whether or not the house is in a high fire zone. And at that point, we have to call you up and ask you to come out and check that house. If you're telling me that zone is being, I'm concerned about the homes that we're not getting more.
So we don't know how far the zones or whether they'll reduce. We're waiting to see what those maps look at. Right now, when you go to sell a house, state law says you have to have a defensible space compliance report, which we as the Ventura County Fire Department do. This is throughout the state. CAL FIRE does in a lot of areas. When we're coming out for that, a lot of times you look at your report. And those reports, unfortunately, sometimes have errors where they say you're not in a zone, but you are. Or it says you're in a zone, but you're not. And that even happened to me when I bought and sold a house in Simi that said I wasn't in the zone when I was clearly in the zone. So look at the maps. They're available. There's links on our website. They're on the State Fire Marshal's website. But state law is already there. When they implement the high zone, it will trigger people to get an inspection in those zones because that was what was passed by legislation several years ago.
May I just add one more thing? One of the things that you will hear from insurance companies when they review your rates is that they will say, you know, we can't really, we got to increase your rates because you're in a high wildfire risk, not wildfire risk zone, but wildfire risk score, because your wildfire risk score is too high. Now, with the Safer from Wildfires framework, the commissioner has made it so that you can go back to the insurance company and ask them, how did you come up with that number? Tell me the reasons for it. And if you disagree, now you have the ability to debate that with them and actually say, I have actually done all of these things, so you can actually, you know, get the correct you know, reading of that for your house. In the past, insurance companies would just say, that's your wildfire risk score. When you ask, well, how did you come about it? Tell me what you know, why is my number so high? They would say that's proprietary information, and they wouldn't share any of that with you. So that left you just out in the dark anyway. But now you have the ability to do that. If you go back to your insurance company and say, my wildfire risk score shouldn't be that because I have done all of these different things, if they don't do anything about it and they don't agree with you, excuse me, the Department of Insurance has an 800 number, and I know 800 number sounds horrible, but I promise you, you will talk to a person, and we have a 2-minute callback. If all of the lines are busy, we call you back within 2 minutes. But that, right there, you will be able to talk to an expert who will be able to review your policy and then contact the insurance company on your behalf and work with you on that. So if that is, you know, if that is the case, I encourage you to call the department, and the department is there to support you in your endeavors there.
That's great.
Yes, the number is written in all of the forms is 1-800-927-4357. And it's in all of the forms that have been passed out. All right.
Can you repeat that again? I'm so sorry.
The number is 927-4357. I'm going to repeat it one more time. 1-800-927-4357.
All right, so kind of a question just following up on that. If people have trouble finding insurance, they can also call the insurance commissioner, right? So is that the same number to help somebody, an individual, find insurance, or do you go through a broker?
Yeah, so you normally will go through a broker because they will be able to help you figure that out within your area. However, we do have different things in our website. Our website is insurance.ca.gov. So it's real simple, insurance.ca.gov. You can chat with somebody online if you don't want to talk to them, but you can also, right there, we have tips on how you can do that. you also have the ability to go in and find out, okay, who's selling what, and what are the companies that are selling, what did they stop selling, so that you're able to see everything there and don't waste your time in that. The way that we have it set up, the general market that the commissioner oversees, make sure that they are all in good standing and that they are good and they are not taking advantage of consumers. That is the regular market. Then we have the fair plan, which is the insurance of last resort, supposed to only be used for a little bit of time, only for stopgap. But then we also have the non-admitted market. That is for those of you that maybe have way too much risk or cannot find insurance whatsoever, and even the fair plan is not enough for you, or anything like that. And those companies, the non-admitted market is the Lloyd's of London, those types of companies that that are not necessarily, they are able to sell you insurance, but they are not regulated by the state. All that means is that they don't have the backing of the state. So if they do, if they lose everything, the state doesn't come in and make sure that you're whole, you're made whole. But most of these companies, you will know the names. If you have to go to one of those, one of the things that I suggest is maybe talk to brokers who are not in your area, maybe brokers that are in other areas of the state who might also have a lot less risk here. And then they might be able to find a company that is able to sell you insurance. But that will be like the absolute last resort when you need insurance.
So kind of along those lines, first, I think everybody's first concern is finding insurance, but Prop 103 has done a very good job of limiting insurance increases, and obviously it sounds like limiting them too much, so it drove insurance companies out. But what is the insurance commissioner going to do once these regulations are in place to make sure that you don't have these extraordinary increases? We heard 70,000 increase. Somebody on this has a 30,000 increase. And so our constituents need insurance, but they also need to make sure that the prices are within a reasonable range. So what is the insurance commissioner going to do for that?
So one of the entire time that I was talking about what we're doing to bring back the market, you heard me talk about availability. It's basically making sure that insurance companies are selling insurance. I did not talk about affordability because the state does not, we don't have what is it? Insurance companies are not utilities. They don't have to sell insurance to you. When after the earthquake in the Northridge earthquake, a lot of insurance companies lost tremendous amount of money, right? And so at that point, the legislature was like, okay, we need to do something. We need to make them sell insurance. So they made all these rules that they have to sell insurance. If you sell insurance and anything else, you have to sell earthquake insurance. 95% of those companies stopped selling insurance altogether. They just, nope, we're not going to do it. And so what we ended up having to do was create the CEA, right? The California Earthquake Authority. How many people do you think have earthquake insurance in California? 3%. About 10, it flies from 10 to 13% maybe on a good day. That means that hardly, in comparison to the state, in comparison to what is needed, people are not buying insurance. And we cannot afford that for a homeowner, for fire at all. So that is exactly why we can't make insurance companies do that. So what we need to do is create the market where they are going to then be competing to get your business again. And that is what's going to then bring the prices down. So that's where we're at.
Daniel Groff is going to answer the last question that we have from the public, and then we're going to pivot to Stephen's presentation. But the basic question is, okay, where can I get insurance now? What can I do right now? So Daniel, thank you.
So getting insurance, the best thing to do is reach out to a broker. They represent multiple carriers. and they know what the marketplace looks like. The non-admitted market is out there. There's companies like Lightspeed, Delos, Heritage, SageSure. Ask your agents about those. If they don't have them, find somebody else that does. The FAIR plan is the last resort. Somebody did ask a question, can I get liability only on my policy for my home just to protect me against a claim regarding their home for liability? Nobody's offering that currently, but there has been talks about it because a lot of people are self-insuring. There's a lot of homes out there that have no insurance at all. They can't get it. They're not going to spend the money. It went from $10,000 to $35,000. They're just not doing it. That's a big risk because that's your biggest asset. So reach out to a broker. You can find them anywhere. If they don't have a loan, though, there's a lot of them that don't have a loan and they'll do it. So, or they'll get forced placed insurance by their lender, which still doesn't protect them for their liability side. So I'll be around after if anybody has any questions and I can answer more.
Yeah, thank you, Daniel, and thank you to all the panelists. Really appreciate you being here and providing your expertise and being on standby. Let's give them a round of applause. Thank you. We're going to move out of the way up here up front and allow Stephen Watson, the director of the Regional Fire Safe Council, to provide a presentation. It's going to answer a lot of the questions about what are these different delineations. What does a hardened home look like? What is a defensible space? What are the requirements? And how does this affect me as a property owner? And the one thing that I do want you to leave here with is this sense that I've developed over the last year watching this crisis unfold, and that is the benefit of a crisis is that we as a community has become safer, and we've been focused now individually on our homes, collectively on our communities. HOA, I was an HOA president last year, and we spent enormous amount of time, effort, and resources to make our common areas safer from fire, to comply with these insurance requirements. So the good news here is I think in the end, Ventura County and the residents of Ventura County will be safer, and that is one of the good outcomes otherwise underneath the cloud of this crisis. So with that, absolutely. Rosemary just reminded me to tell everyone that the panelists, including myself and Rosemary and others, will remain afterwards so we can answer questions. We've received a few cards that have detailed questions that we're just going to have to get answered and sent to you later. And then anyone who sent a question to Supervisor Gorell at ventura.org will also have their questions answered. We want to make sure everyone's concerns get addressed. So with that, oh yeah. Would you like to make some? Please. Yeah.
Thank you. One quick thing that it just occurred to me right now. One of the other things that we're doing is we are modernizing the FAIR plan. And one of the huge things that we have heard from HOAs in particular is that even when the FAIR plan, they don't have enough coverage. The FAIR plan in 2019 only provided up to $1.5 million for a home and $3.5 million for a business, for an HOA. We have increased that, so now for a home you can get up to $3 million, and for HOAs, businesses, you can get up to $20 million. In some instances, $20 million is still not enough. So coming next year, one of the things that we're doing for HOAs is making sure that you can get insurance for $20 million per building within the HOA. So at least those are some of the things that we can do. For the fire safe consoles, the really wonderful thing about that is that if you are a fire safe console, you can actually go from there and apply for funds to help your community do some of that mitigation. So I encourage you, if you are not part of a fire safe console, you're going to hear more about it, but if you know, those are the types of things that are available for you in the state. Thank you all very, very much.
I think I broke it. We're just getting our laptop up and running here, and the good news is that Stephen Watson has done this so many times he can do it without the images. I want to apologize. They keep telling me I need a mic drop moment. It's usually at the end of the performance and not throughout the entire performance. So I apologize for continuing to drop my mic. But on this, we're gonna just step aside and let him kind of take the front and center and to take over the conversation. But we will wait, and I know that there's going to be a quick closing remarks completed. But everyone, thank you for your attention to Stephen Watson, please. Thank you.
All right, thank you so much for having me here. My name is Stephen Watson, Executive Director of Ventura Regional Fire Safe Council. I think they'll try and get this presentation working, but I'll do it without it, and we'll email you the slides after if you'd like. The first thing I want to say is that, gosh, hearing all this, it's kind of hard not to feel a little discouraged, right? I mean, it's hard to stay positive with all this that we're hearing about. Hopefully that we're going to add a little glimmer of hope to all of you. We're a 501c3 nonprofit. Our whole mission and purpose is to protect and prepare Ventura County residents for wildfire. And we do that by offering no-cost services, assistance, education to communities throughout Ventura County. Looks like the presentation is working now, just on time. Can everyone see it and hear me? Cool. So I'll make this pretty brief because I think I only have about 5 minutes or so, but what I wanted to address are some of the questions that were asked about what can residents do, what are residents doing, and how we help support them, and also how it relates to insurance. I will give a huge disclaimer that insurance is not our specialty. I am not an insurance expert. However, I would say, unfortunately, probably 50% of our phone calls are about insurance these days. And rightfully so. I'm sure all of you have challenges, complaints, and so we're going to talk about the programs we offer that do relate to insurance. You've heard Firewise USA mentioned a few times. You've heard home hardening. So we're going to specifically stick to those, but we offer a handful of other free services that are specifically focused on wildfire safety. So first I'm going to talk about Firewise USA. So this program is a community scale program. Anywhere from 8 to 2,500 dwelling units can be part of a Firewise community. And since this is about insurance, let's talk about real life examples. We're kind of the front line. We hear a lot of theory. We've heard before from the Department of Insurance that insurance providers are supposed to be offering reductions in rates when you're part of a Firewise USA community. What we've seen is anywhere from 1% all the way up to 27%. And the 27% was an HOA that did a lot of work after getting recognized, and they shopped around. So that's one of the biggest things that I will tell people. Be proactive, shop around, talk to your broker, because your insurance company might give you a 1%, but a different one might give you more reduction. So it's really important to shop around. The other thing I'll mention is that the reason I said they're supposed to offer reductions is because I was in Peru this last weekend and the weekend before because we did a community project in that area. They were recently a Firewise community awarded that recognition about a month and a half ago. I was talking to 2 residents side by side. One of them said they got a 2% reduction. The other one said their insurance provider said they're not recognizing it. So that is why I never guarantee anything. However, that's one of the challenges we're facing is we feel your struggle because we hear it every single day. So with Firewise, I would encourage you to reach out to us. We help support every step of the way with this program. You'll see up here that there are 6 relatively simple steps. The other thing I will note is that we have virtual monthly workshops the 3rd Friday of every month. So if you're really great at math, you know that in a couple days, there will be a monthly virtual workshop. I'd encourage you to sign up online and learn more about this program and also talk to other communities and network with other ones that have gone through the process and can help you along the way as well. With this Firewise USA process, so some of the benefits are potential insurance reductions. The other thing that I will say that is not potential is that we have secured some limited funding to be able to provide direct assistance to communities that become recognized. And we can help support some of the things that are listed in your 3-year action plan. Now, if I go back for a second, Number 3, develop an action plan. So this plan gets approved by CAL FIRE and NFPA, and it lists all the steps that the community is going to be doing in order to make their community safer. And we can help fund some of those projects in that action plan. So even if insurance isn't going to help you out, we will. I also wanted to leave you with some useful resources. This will be shared. I've been told that this can be sent out to everyone who is on the email list. Our website is on there. One thing I do want to mention, that this is all about insurance, but I'm going to say the best insurance possible is to make your home safer, to prepare, protect yourself, do the steps. We offer free home wildfire assessments. We can send someone out to your home, walk around the property with you, talk about the steps that you can take. I said at the beginning that half of the calls are about insurance. The other half are about a resident complaining that their neighbor is not doing enough on their property. However, I will say, I can guarantee you, if we send someone out to your property, we can find something that you can do to make your property safer. So it's not always about your neighbor. There are things you can do. There are things your community can do, and we can help you out with that. We can provide education. We can provide resources. As you see here, there's what's called Wildfire Prepared Home. And Assemblymember, kick me off as soon as you need to. But I can keep going forever at this point. So the Insurance Institute of Business and Home Safety, they are kind of the gold standard behind the scenes when we're looking at insurance. A lot of them are taking them into consideration when determining wildfire risk. So they have a wildfire prepared home model, and we've had residents come to us and report, they show us the letter saying, if you don't get this wildfire prepared home certification in 30 days, we are not renewing you. The issue with that is it can take 10,000, it can take 20,000, it can take 40,000 to get that wildfire prepared home model, right? And a real life example, we had a resident go through all of that work. They kept their at a 300% increase. And so they went onto the FAIR plan anyways. So I'm not saying this to try and discourage, but I am saying that the positive thing of this is that their home is safer. No matter what, their home is safer because of the steps they made, and they can shop around and look for alternatives. The reason I'm saying it is that so that you don't come back to me and say, you promised me you're getting a discount on insurance. Because it's volatile out there, it's uncertain, and I feel for all of you. But what we can do is help prepare you for wildfire, and we're happy to do so. So reach out to us, call us, have us come out to your home. We can speak to your community as well. And I will end it with that. Thank you so much.
Hopefully I didn't kick you off before you were done, but all our experts will be back here so you can continue to talk to them. I had my home inspected, and there were some very easy things that were recommended. One of the things that I learned is that most homes don't burn because of direct contact with fires, but it's the sparks. And it's the exposed wood. So you don't want any wood up to your next to your home. You also want to look at having the right type of roof, and eaves are very important, making sure that that you cover the eaves and then cover any vent holes that are going into the attic with small mesh. So all that information will be there. Don't think that you have to do it all at once, but take it one step at a time just to make your home safer. And it is, right now people go through the effort of protecting their home, and they're very frustrated that the insurance companies aren't giving them the discount that was promised. But as you heard this evening, we are hoping that the insurance market stabilizes very soon with the steps that the insurance commissioner is taking. So I really want to thank all of you for being here this evening. Spread the word, talk about what your neighbors can do to make themselves safer. And I am optimistic that there is a light at the end of the tunnel, but we all need to work together and do what we can to keep our home safe. And the insurance companies, we need to make sure that they come back into California so we can have the competitive market that we need to keep those rates down. So thank you very much.
Thank you for coming, and thank you for taking an interest in your community and being active residents. Thank you so much. We'll stand by and answer any questions.